And looks like the stream was deleted on LinkedIn. Try creating what? Oh my goodness.
See, this is the authenticity we love.
This is, well, you know what? All I know is it says that somewhere it's live. So I don't know.
It
Maybe
says live up in the corner here for me.
It says it's live. But it says it's somewhere. I don't know where it is. But you know what? We're just going to get going because it's Data Security Over Coffee with Joe and Angie and our friend Matt, who's way smarter than Angie and I put together. And I know there's a lot of pressure on Matt now. You thought you were just going to roll in off
thank you.
and hang out with a buzz on and just talk about insurance, and now you have to be serious. And you know you're in trouble when you have a woman on the phone with a call. She's got her glasses on top of her head, so she's really serious.
Just give me a second to gather myself here.
Matt, Data Security Over Coffee is never all that serious.
I can go with sunglasses. We can make look a little more serious
or something. I love it. Like you could be like a regular guest, and when this thing becomes a syndicated show, man, it's constant cash.
Unfortunately, cybersecurity comes up enough that it probably could be a syndicated show between now and the next 6 months.
So, Angie, why don't you kind of wrangle the cats and kind of bring us back to where we're supposed to be so we can be serious for our audience?
Well, the first thing I wanted to say, totally off topic of insurance, is being a Maryland girl, my thoughts and my heart goes out to all those folks that are dealing with the Francis Scott Key Bridge collapse due to that shipping, that ocean container or whatever it was shipped crashing into it. That is just absolutely horrific. So I'm really, really praying for all the families that are impacted by that. And on to pivot to insurance, I'd certainly hate to be the insurer of that cargo ship right now. So, but I'm super excited to have Matt. Matt Bonchak is with the Hartman Agency, and he is also our insurance agent for our cyber liability coverage, professional E&O here at Reclamere. And he has been just a tremendous help for us over the past few years when we moved to their agency. And the reason that Joe and I wanted to have him on today as a guest is because he's incredibly knowledgeable about what's going on in the landscape. Pressure. And just for a point of reference, last week when we kind of had a little prep call with Matt, we talked for at least a half an hour, and I could have just talked to him for an hour. It's too bad we didn't record that and kind of make that part one, because it was just some of the things he was talking about were just fascinating. But you just said something, Matt, that caught my attention. And you said, in cyber insurance being interesting, especially over the next 6 months. What are you seeing in the industry that would make you say that?
First and foremost, thank you guys for having me, and I share your sentiments about the situation in Baltimore. I used to live down in that area and take that bridge many times, and I can only imagine what people are going through. But to pivot back to our discussion, in terms of the next 6 months, what we have seen in the cyber insurance marketplace is a level of, trying to describe it as maybe catch up in terms of what the insurance carriers have been requiring in terms of controls, and importantly, how the insurance carriers have priced coverage. And what that has shown us in the past is it's essentially not that they've figured out cyber, but that they have acclimated to the current environment of cyber as it was 2 years ago. So when they do that, when they make that acclimation, that's great because it provides some sort of stabilization in pricing, and it provides some certainty in terms of what controls they're asking for. But we also know from experience that essentially means we're in a bit of a stopgap period where the next inciting exposure or cost indicator or environmental change is always going to be a bit of a lag behind with the insurance industry in terms of what's happening, boots on the ground in the cybersecurity space. So when we see that, we anticipate that changes are coming, and it's a matter of when those changes get communicated to our insureds via somebody like me, and what changes we see then policy-wise and premium-wise for our clients. So it's not to say I have any predictions of the future, because I am not an IT security expert like Reclamere is. But what I know is what experience has taught me, and if we don't learn from the past, then we're in big trouble. So so just watching the waters and assessing where things stand. Once they tell us they're comfortable, that basically means something unforeseen's on the way.
So let me ask you, pull up your crystal ball, put on your wizard hat. What's the biggest change you're expecting to see over the next 6 months?
Well, it comes from two sides. One is going to be pricing. When a lot of the carriers that are probably on, I would say maybe 30% of the policies issued in the country are issued by small carriers that are tech startups of one form or other, or they are they're small spin-offs that exist in the excess and surplus line space. Generally, what happens is, one, they'll get acquired, or two, they will start to pay claims on policies they wrote 3 years ago. When that happens, they realize all of a sudden the reason they wrote all that business was because they were priced too cheap in order to respond to their claims. Insurance is a fairly simple dollars and cents business. They have to charge more in premium than they pay out in claims. And once you load in sufficient overhead and things like that, you start to finally see the pricing bear itself out. So what I would expect is really outside of Chubb, Beasley, Travelers, the largest carriers in the space, we're going to start to see increases for all the smaller carriers that bought their way into the space. And in addition to that, we're going to see one of two things from mid-sized carriers and carriers like, say, a Cincinnati or a Selective that are not cyber carriers but are trying to get into the space. Either they got into the space and they're going to get out, or they're going to try and intelligently move their way into the space. So we'll see some carrier movement there. The other thing we are going to see at some point or other, whether it's 6 months or 1 year from now, is I think we're going to see endpoint requirements for monitoring as similar to what we saw with multi-factor authentication a couple of years ago. So we're going to see the next control requirement being put in place. That's either going to be a vendor service provided by the carrier, or it's going to just be a requirement that you have it in place through an approved vendor that will be a new benchmark for simply accessing coverage. I don't know. I don't know where it's going to come from, but it'll come from somewhere.
Yeah, and just to kind of jump in here, when you talk about how being 2 to 3 years behind, we pounded on everybody for such a long time about multi-factor authentication is the answer to keeping your environment safe. And what we have seen over the course of the past 6 months has been a massive increase in successful cyber attacks due to multi-factor authentication token theft, credential theft. And the reason for that is because that multi-factor authentication drops a little token into your browser. And if you don't flush that token out within some time frame, then when one of your users clicks on something or somehow gets compromised, that token is stolen and then used to authenticate into all of that user's accounts. And what we're finding is then that things like Office 365 mailboxes full of EPHI are being compromised. And so we're going to, I predict, within the next year 2 years, 3 years, see that not only is multi-factor authentication required to get insurance, you're going to have some type of token expiration on your multi-factor authentication set. And that needs to be something definitely less than 1 year, definitely less than 90 days, definitely less than a week. We're telling clients right now, we would prefer to see nothing greater than 24 hours. And ideally, we would like to see that token flushed every time the browser is closed. End users hate it because now they have to type in that multi-factor code again. But the incidents we're seeing are so unbelievably severe and catastrophic that I can't imagine that just having multi-factor is going to be sufficient over the next year, 18 months, 2 years as we go.
One thing that's always been true, Angie, about multi-factor authentication specifically is for serious carriers that cared about managing the controls in place for their insureds, that we had to act as a sort of conduit between the carriers and the clients. Is multi-factor authentication was never just as simple as a yes or no answer, or even 2 to 3 yes or no answers. So a lot of what we did during 21, 22, 23, whenever our insureds got into a program that required multi-factor authentication, was facilitate conversations between IT service providers and the carrier to determine specifically what level of MFA was in place. Was that sufficient to satisfy the carrier's threshold? And that's a moving target. So what was true 2 to 3 years ago, because the difficulty that we experienced with a lot of our clients was they knew they needed cyber insurance because that was just a risk management necessity as part of their overall risk portfolio. And if it was their first time purchasing it, or their first time purchasing it with serious limits that actually address their risk needs, there's obviously a cost to that. You have to buy an insurance policy. But on top of that, if they had to make cyber security upgrades in order to satisfy the multi-factor authentication requirements, in order to gain access to the most preferred carriers, there was a cost to that as well. So it was sort of like a double punch. And
and the other thing, Matt, is that we work with a lot of healthcare clients, a lot of financial services clients, where some of them are dealing with legacy systems that do not have the ability to deploy multi-factor authentication. So that challenge is something that we're going to continue to talk to clients about throughout the year, especially. Joe and I were picking some topics for our data security over coffee and some of our social media and marketing efforts later in the year. We're going to really be emphasizing cybersecurity budgeting for 2025 later this year. And those are the types of conversations that we need to start having earlier. So that's another reason why this conversation about what you're going to see over the course of the next 6 months is so important, because it's not just going to be about budgeting for multi-factor. It's going to be about budgeting for other things like DLP, data loss prevention, so that you can figure out what is in those mailboxes, how much EPI is sitting in those mailboxes, how much PII is sitting in those mailboxes. And if you don't have good tools in place, and then the processes and procedures so that your people can follow through, we're going to be finding out how many records are in there when you have a data breach. And that's not a great time to be finding out how many of those records you have at that point in a security incident.
Certainly, and the broader
I have to interrupt
point
both of you.
that
this is really important. I got to ask you. Hold on a second. Hold on.
Sure.
This is the first time in over 2 years of data security over coffee being on air that right now Angie Singer-Keating has more words spoken than I do, ever. You are, without a doubt, Matt, the greatest guest so far. You have brought her out of her shell because she's very laid back. She's very quiet. So humor is good. That's why they have me on the show. I don't know a damn thing about technology or information security. I'm just the goof that sets it up and makes jokes. But anyway, I'm telling you right now, you're a special guest, dude, because she's always been very quiet. Now, I am going to ask a question. So we were going to have a guest on board. Unfortunately, she got really, really sick, and I'm hoping that she's okay.
Yeah.
Because I'm the simple-minded one on the call right now. What are the 3 things that customers that are contemplating getting a policy, not renewing, but going out for the very first time and getting a policy, what are the 3 things that you think they really have to pay attention to?
In terms of, are you asking in terms of internal controls or just what to expect from the process? Or all of the above?
Internal controls. Sure. Let's just go for it.
So, well, the first thing that that I think is relevant to talk about in terms of an internal risk assessment and whether or not you need to consider cyber as part of your risk management profile, which is sort of a rhetorical question at this point, because there is almost no company out there that I can see that doesn't need to make a serious evaluation if they care about managing their risk via insurance, that doesn't need to really think about having some sort of robust cyber in place. And I say that simply because of claims experience from our own office and the breadth of different types of clients that we have and where we've seen cyber claims come from. But to answer your question, I think they need to, one, consider what exactly they need to insure themselves against. It used to be a more mathematical decision that was based on the amount of personally identifiable information any given client would have in their system. The introduction of ransomware as a major cause of cyber claims and as one of the primary insured exposures has changed that decision point really from how much information do we have, and for a lot of people that's not much, to how difficult is life going to be, or can we operate as a business without computers for a month? Because virtually nobody can at this point in time, without email, without logistics, without tracking your invoices from A to B, whether you're a landscaper or a municipality, it's virtually impossible to operate without computer functions for a month while you're negotiating a ransom or deciding whether or not to pay it or letting the data restoration process take place. So there's that. There's the consideration there, and then the consideration part 2 is what type of uninsured financial blow are we prepared to take? Because the fact of the matter is, for cyber claims, there is both a frequency and severity component. Cyber claims, 1, happen more and more frequently, and 2, they are virtually never cheap. They are never $5,000 claims. They're almost always at a baseline $30,000, $40,000, $50,000 claims, or $18,000 vendor fraud claims, or this, that, or the other. They are never minor, under the deductible, little fender bender auto claims. They are generally significant. And for most organizations, most businesses that operate, cash in and cash out and are making good money and building equity and doing a good service for the public, almost no matter what size and scope they are, they can't absorb $100,000 uncovered blow. So what's the point of insurance ultimately? It's to save your business from a bad thing taking out the whole shebang. Well, that's most likely to happen right now with either a terrible auto accident that's uncovered, because for some reason you didn't have auto insurance, your place burns down and somehow you didn't have property insurance, or a big cyber claim and somehow you didn't have cyber insurance. So if we're thinking about the things that matter most, that can save you the most, that's the other thing to consider. And the third thing is controls. Multi-factor authentication being the primary one right now, as a means of an initial entry point into better carriers and more carriers considering insuring you. There are a few out there, and there are very few anymore, that will consider non-multi-factor authentication accounts for offering an insurance quote. And the fact of the matter is that number continues to dwindle. When you dwindle that, you go to worse carriers that charge you more and that have probably less robust claim services at the end of the day. Because the final component there that I think is really relevant to cyber claims is, at the end of the day, most cyber clients, most businesses that we insure are not IT savvy businesses. They are either construction companies, landscapers, they are restaurants, they are municipalities. They have plenty of value out there, but they are hiring maybe a third-party IT consultancy to handle their IT. They are they're specialized in something else, like us. We're an insurance agency, or they're a law office. So when your building burns down, while you can't do it yourself, you generally know what to do. You have to call the fire department, and once the fire's out, you have to call the insurance agent, hire a contractor, have them rebuild the place, and hopefully the insurance company pays for it. They sort of understand the process. When a cyber event happens, most people don't even know where to start. So the claims management process that is provided by a cyber carrier, managing that on your behalf, coordinating services with data restoration, computer forensic experts, legal representation that's specialized in cyber breach incidents, negotiating ransom, looking at business interruption losses or dependent business interruption losses, and evaluating whether or not you have a claim and how to get from A to B to make you whole again is something that most people just don't have an innate understanding of how to manage that and what steps are necessary to take, either legally or logically. So when we can introduce a carrier that can help guide them through the process, an agent that will help manage that process for them when the claim inevitably happens, gives them a much better chance of, one, mitigating the claim, making it smaller, making it shorter, and getting you through to the other side where you can just start operating again. So,
well, and Matt, one of the things you brought up was not knowing what to do. And, one of the services that Reclamere provides for clients is incident response planning and incident response tabletop exercises.
It's critical.
And one of the challenges that we frequently have is getting participation in the tabletop exercise from executive leadership, from legal counsel, from HR, and from finance. And they believe, until something happens, that incident response is an IT problem. It is an IT-centric challenge. It's not. It's risk management, and it's governance, and it's financial. And so when we see some of these recent attacks where it has to do with a critical vendor being down, that then impacts your ability to operate, and we start asking questions like, well, if your payroll services provider is down and you're not able to direct deposit your employees' paychecks, who is it in your company that's going to write out 500 paychecks on a weekly, bi-weekly basis to all of your employees? And how are you going to handle the fact that your employees, who are used to having their money at 12:01 midnight of payday in their account, ready for all of their automatic withdrawals, having all kinds of transactions bounce, and those fees that your employees are going to incur? And you start to see the wheels turning around the table. And if we haven't been able to get those folks to the table in finance and HR in the first place, now we see IT's wheels, the people sitting at the table going, oh, that's a great scenario. We need to ask the folks in finance and HR, how will we do this? How will we handle this? And so I think we're starting to see incidents evolve that are proving to executives that they have to be at the table. They're very busy. I get it. Everybody's time is valuable, but they don't want to be answering those questions in the midst of an incident. We need them to be at the table with us, talking through how will they respond to these types of incidents, and who are the critical vendors that not just IT can't live without. Who are the critical vendors that finance can't live without? Who are the critical vendors that HR can't live without? And what does the organization look like when those vendors are down for a day, a week, a month, or months at a time? And it's hard getting that through to folks, and getting all those stakeholders at the table.
I can only sympathize with that difficulty. That being said, the higher the risk of loss, the more that these controls, at the end of the day, insurance is a great financial means to transfer risk via the payment of premium. Okay. We all sort of understand what its role is in the ecosystem of risk management, but cyber is like anything else. And I happen to have the perspective of somebody who started in the insurance industry right as cyber was becoming sort of a viable commercial product for our accounts. So I was in on it on the ground floor, and I've watched it develop over 10 years. And initially, it was more of a pure financial transfer of the risk, where a school district, for example, might say, well, hey, this might happen to us, and we have a boatload of records for students and parents and employees and anything else. So we better get a policy in place as a CYA measure. But our IT is still fairly basic and farmed out to third party provider X, or we have one in-house IT person who's essentially managing an email server at this point, to what's developed now, which is an expectation, I think, from most parties involved, especially for any larger organization, municipality, or more technology aligned, sophisticated account, where cybersecurity and the controls in place are an expectation. And part of that is a similar expectation that we would have as a risk manager ourselves, to speak with our clients and make sure that they're aware of how they're going to operate the same they would if the headquarters of their organization burnt down and they had to transfer operations. And part of a cyber insurance policy is business income coverage, which is essentially a dedicated portion of your policy for income loss during a cyber event. But a major component of business income coverage is the mitigation of that business income loss in as short of a time span as possible. And with cyber in particular, I think it's probably one of the easiest ways, or it's not, I shouldn't say easy, but is the most logical place to try and game out scenarios because of the interconnectedness of vendors and your own operations, and trying to be able to have some expectation of what will happen in the event of a ransomware attack.
So one of the things Joe and I try to avoid as much as possible is something we call FUD, fear, uncertainty, and doubt. We don't want to just leave people with a bunch of horror stories.
Oh, we're all going to die, Angie. It's okay.
And then, what we want to do is we always try to make sure that people have actionable things that they can do. Mm-hmm. And I want to talk about what are some of the things that people can do to potentially lower their premiums, or at least hold them to something reasonable. Last year you gave me one of the most positive professional surprises of my career, which was, for the very first time in 22 years of being in business, we had an insurance coverage that the premium went down for the same coverage. And the reason for that was because we went through the process of getting our SOC 2 audit by a CPA firm. And that resulted in a substantial decrease in our cyber insurance and professional liability coverage. So can you, now that's not something that's for everybody out there. I don't see a healthcare provider going out and getting a SOC 2 audit. But what are some of the things, if there are other things I don't know, are there any things that you're seeing that can help result in either holding a premium flat or even a reduction?
So there's two components here. One's controllable and one's uncontrollable. The controllable part obviously is whatever you do internally. The biggest recommendation I would have, if you are being proactive as a policyholder and trying to improve your internal cyber protocols at any given time, is and your story is relevant to this, which is whoever's acquiring the policy for you. If it's me in this role, tell your story to me. I didn't ask you, did you go out and get SOC 2 designation last year, and get that all taken care of. You came and told me, hey, we did this. Can it help? Because whenever we are either renewing a policy or getting a policy in place for the first time, we are more asking structural questions and trying to understand the scope of your operations. So if there are any changes that you've made, if you've done tabletop exercises, if you've engaged with a new cybersecurity firm to put a action plan in place for how you're going to handle an incident response, if you have upgraded your internal cybersecurity, if you've put endpoint detection response programs in place, please let me know so that I can communicate that to the carrier so that we can access any potential advantage we have, or remarket your cyber coverage to the greater cyber marketplace and see if there is a carrier that values that and will provide similar coverages for a reduced premium. So that's number one. Now the uncontrolled part is number two, and we sort of spoke about that right at the beginning, which is what are cyber carriers charging for cyber insurance right now? That may be somewhat outside of your control. If you feel very good with the current carrier you have, but you are in a certain class of business and your revenues have increased and they have experienced significant losses in the healthcare sector as part of their cyber book, you may be fighting against the current somewhat. But at the very least, you'll have best positioned yourself if you tell your own story and speak about what you've done. And that also, I think, helps validate those decisions and those cyber protocols that you've put into place and the good steps that you've taken. And it's similar to, if you have a large fleet of vehicles and you added a GPS component to manage the performance of your drivers out there on the road, you should be telling that to your insurance agent. Do the same thing for any cyber that you've put into place. If you've moved from a frame construction building into a fire non-resistive building, tell that to your insurance agent. Make sure that they understand so that they can use every tool that I have in my toolbox to access you better rates and a better premium, and to ensure that we keep you with coverages that are relevant and responsive in the event of a claim.
Yeah, I can't promise a client that if they have us perform a security risk analysis for them, and then I provide a letter of attestation as a certified information security auditor, I can't promise them that their insurance premiums will drop. I can't say that it'll have any impact, but it certainly can't hurt.
No.
And that's different than saying, we did our own security risk analysis. Having that third party independent validation attestation can only help.
And I think it's also important to remember when we're talking about any of this that of course the insurance is there to protect you financially, especially, and also to help mitigate claims, via claims management if something does happen. But even in the event that something happens and you have a breach, it's never a painless process to get past that. So the cyber controls that you put in place beforehand, it's tough to define and quantify a negative that we didn't have a claim because we put X and X controls into place. But it's always better to avoid a claim than it is to have appropriate coverage even for a claim. That might make you whole at the end of the process, but man, it's going to make your next couple of months really a pain in the butt.
Well, I know that I get the feeling Joe's probably going to get out the hook and yank you and I off the stage here shortly. The one last question that I have for you is, can you share with us what happens after a claim in terms of, does an organization have any hope of getting coverage again? I know if I have a car accident, I know my premiums are going up. I know that if I am a repeat drunk driver, I may never get coverage again that I could even remotely afford. Walk us through what it looks like after a claim has been paid out, or even if you make a claim that's rejected. Are you getting coverage ever again? And if so, is it going to be with a carrier that you can that's worth anything? And is it going to be something that's even remotely affordable? What are you seeing happening?
Well, I'm trying to think of what the drunk driving equivalent is in the cybersecurity space, but I'm not totally sure. But what I can tell you is that for any of our clients that have experienced claims, it has not been a barrier to them regaining coverage in the future. Now, there's absolute truth to the statement. In the commercial space, it's not as cut and dry as, say, with your personal auto, where if you have a claim, your rates are going to go up. That's a little more formulaic. But the reality is, if you have a large claim or two, that you can probably expect a premium increase as a result of that. Nothing that hopefully will be prohibitive, but it's very circumstantial. But the circumstantial component can be advantageous because commercial carriers have more flexibility with how they handle premium and pricing. So, at the end of the day, generally you are judged in the cyber marketplace for commercial insurance based on what protocols and what protections you have in place. So really what I'm saying is, if you do all the right things and you get hacked anyway, and you get ransomware anyway, by some unknown, circuitous path into your system that nobody could have really expected or anticipated, then you're not going to get dinged too hard by your current carrier if they value the quality of the risk versus the pure dollars and cents impact of the claim. And if you have to move from one market to another because of that claim, then generally that's not going to be a lifelong prohibition on cyber insurance. So it's not the end of the world. It will probably have somewhat of an impact on your program. Let's not lie and say it won't. But that's where, frankly, I come into play as your agent and your advocate for you to cyber carriers to make sure that either your incumbent carrier understands why they shouldn't get off the risk, or if we decide to move the risk collaboratively as an agent and a client, that we do so in a thoughtful manner that places you with somebody that you remain comfortable with, and that provides you with the coverages you feel are relevant. And the premium impact will mitigate as much as we possibly can. But that's where I do, the lion's share of my job is not being reactive necessarily, because we want to be proactive in that situation. And that's what we try and do when we're managing cyber risk for any of our clients, is, not show you renewal terms just the day before, the policy's up, and work through it as far in advance as we can so that we can anticipate any changes and manage the program in a way that is responsive to our clients' needs.
Well, and I can attest that you do that, because I just last week received my renewal notice from Hartman, and we don't renew until July, and it's March, and that's how far in advance you guys work with us. The other thing that I always tell clients also when they're trying to figure out whether or not they're going to file a claim is we, as your cyber partner, consultant, we need to understand what your policy exclusions are. Because the last thing I want a client to do is file a claim for something that is in the fine print as being excluded. Because once that claim is on your record, regardless of whether it's paid out or not, if it's filed and rejected, that's on your record and that affects your premiums going forward. And that's, again, where they need to also understand with their agent like you, what is excluded, because if something is excluded, filing a claim against something that's excluded is just a really stupid move. And that does in fact happen.
And that is all almost entirely situational. Mm-hmm. So there's no good rule of thumb there. Right. Because you're working with a few different layers there. One of which is, is it excluded? Well, how clear is the definition of what's excluded? And is there any gray area there? Because if there is, then there's legal precedent for gray areas to be solved in the favor of the insured. What is the particular coverage you need? What's the size of the loss? And is it worth, giving it, at the end of the day, I am not the insurer for these claims. So it's not my ability to say yes or no to coverage. And if it's a $500,000 loss, and even if it's a wing and a prayer that there's coverage, sometimes it's worth it to just go out and at least try to get coverage. I know that in my career across different coverages and different circumstances, I've been given declinations that we've successfully fought back against from time to time, and I've also seen claims that I thought would be covered ultimately get declined for this reason or the other. And the point there is you should have a solid conversation with your insurance agent, if necessary, with legal counsel, and make sure that you feel really solid about a decision not to file a claim, and make sure that the policy form itself is inspected closely and carefully, and that you're not giving up the potential there. It's just all so circumstantial and dependent on the particulars of each situation. But it's something that hopefully you have a solid relationship with your broker that you can lean on to feel confident with any type of decision like that.
Sure. Well, Joe, you've been so quiet. I just want to draw you into this conversation with us.
I don't know why you would want to do it now, Angie, because you've done such a good job excluding me from the very beginning. But Matt, like I said to you earlier, like she's normally really quiet. So the fact you were able to draw her out, I know that her counselor is going to be really happy about that because she's been really recently removed from her medication schedule. But the other thing, Matt, I want to tell you, maybe I'm going to make you blush a little bit, but when Angie told me that our cyber insurance or whatever the hell insurance went down last year, because I don't really care, the fact that it went down, I was excited. She had a picture she still has a picture of you on her desk with like lips on it, kissing you, saying that Matt Boncheck is the man. So a few things. Number one,
I take full credit. Absolutely.
Please do. Take all the credit you want to. Take all the credit you want to. First and foremost, thank you, not for being an insurance professional, but for being our friend. Because I think oftentimes what happens is CPAs, lawyers, insurance people, even the cyber people kind of get lumped into this really lousy category. And you know what? You got a lot of knowledge, you got great industry expertise, and you're helpful. And I encourage people to have that meeting, no different than what Angie and I do with our attorneys and with our accountants, et cetera, is to have that conversation with the Matt Bonchecks of the world. Because listen, if they don't tell their own story, that's on them. That's not on you. The second thing is Matt's with the Hartman Group over in the State College, Pennsylvania area. I would strongly encourage you to reach out to Matt. I'm biased. I think he knows what the hell he's talking about, and he's incredibly helpful. And if for no other reason, you can have a couple laughs. I mean, I always think that that's important too. And then lastly, again, I think that, if there's anything that Reclamere can ever do to help your firm or your clients, I think it's all about education and awareness, trying to stay ahead of the things from a proactive perspective is always good rather than reactive. Angie and I always tell the story that when people say, wow, that security risk analysis is expensive. And what we know from data is that reactive dollars are typically 8 to 10x more expensive than proactive dollars. That's a reality in the space that we're in today. So I'm just glad that we're able to have the conversation today. And Angie, thank you for including me. It was great to sit here and just watch you like light up. It was incredible. I want to find another Matt Bonchak to watch you light up. But in all seriousness, Matt, wishing you and your family a happy Easter. And in closing, as our guest, are there any last bits of advice?
One, thank you for the kind words. I do appreciate it. I love getting Angie worked up, so that's no problem there.
You're gonna make my fiance jealous, Matt. Watch it.
No, I mean more angry, and just belligerent. That's what I'm going for. But no. Really, the only thing I would recommend is that if this isn't something that you've scrutinized, it's something that is worth your time to just make a space in your schedule to talk with somebody that you trust on this, whether it's Reclamere to discuss the cybersecurity component, somebody like Hartman to discuss the financial risk transfer component and the insurance component, but to evaluate where you are. And if it's something you haven't thought about in 10 years, it's worth revisiting. Just because you made the plunge a while ago doesn't mean that that you haven't gone back and circled back to it. The number of people that we've run into that think they have cyber coverage in place because they have a $10,000 sub limit tagged onto their general liability policy for ransomware is unfortunate. So it's just education and awareness. It doesn't mean you have to take the plunge and buy a policy, but you're doing the responsible thing if you carve out a few hours of a week once a year to consider it and refresh with yourself the state of what you have and what else is available out there. But same happy Easter to you and yours. I'll come back anytime that you feel like Angie's resting on her laurels and needs to be woken up a little bit, and we'll do this again.
Very cool. Angie, anything in closing?
Just thank you, Matt.
No problem.
Super cool. We're going to wrap it up and then we can continue to chat.